Bitcoin started to rally when gold was rallying. People now know that US dollar is not going to be what it used to be. If Trump is so fixated on fixing trade deficit, even at the expense of all this mayhem.
Narratives that push stocks higher on Trump winning come back and deals are being made. It could be pretty good.
This material is for informational purposes only and is not intended to provide accounting, legal, or tax advice, or investment recommendations, or an official statement of Presto or its affiliates.
Hello, this is the Presto Research Podcast. It was a very volatile week again due to the world's emperor. Trump has backpedaled some comments that he made recently, and we want to talk about that first. We have our two guests, again, Peter and Rick here. We're going to touch on some macro topics. But first, as mentioned briefly, we want to talk about what Trump backpedaled, and that is alleged claims that he will fire Powell, Jerome Powell, the chairman of the Fed. But today he said he has no intention to do that. It seems like the market likes that comment, and a lot of people are saying, oh, Trump has folded against China. But I think we want to talk about why this is a big deal. So I think Peter has something to say about it.
Yeah, so I mean, just to be clear, I think it's kind of a moot point at this point. But just to be clear, Trump never said that he will fire Powell. There was a press report saying that his advisors are looking into ways of investigating if there's a way to fire Powell. Trump himself never said he will fire him. I think what Trump said on his post is that Powell needs to cut rates, and he kind of slammed him as Mr. Too Late or something like that, I think. But yeah, I mean, to be clear, he never said he's going to fire him. But I think the market kind of speculated that that's one of the options that Trump was considering. And then when he was asked specifically by the journalist last night that whether he's going to fire Powell or not, he said that he has no intention to do so. So that's what happened. And then and then you were saying why that matters, right? So I mean the reason why that matters, I mean, if that had happened, basically US dollar is the reserve currency, the currency that everybody, it's an asset that everybody wants to hold. And one of the reasons for that is because people have a belief that the US dollar is a sound money. And one way to, I mean, actually not one way, but I mean, like very critical component of that belief is the belief that the Federal Reserve, the de facto central bank of the United States, is independent and free from the political interventions. But if somehow Trump fires Powell from his current position before his term expires, which I believe is early next year, then there'll be huge damage to that, aura of independence. So yeah, that's why it was a big deal.
Yeah. So now that we are, I guess, so back, I don't know, like Bitcoin is like trading in 93K, and people are already talking about rate cuts and all. But well, I'm not a macro guy, so I can't really comment on this, but is it even possible to cut rates in these environments, or like what do you think?
Yeah, so I think we need to step back a little bit and look at what the market was discounting before today. So before today, market was discounting that market was expecting that this trade dispute is not going to be resolved very quickly, and that's going to translate into the growth scare or recession. And as a result, futures market were discounting that the Fed is going to have to cut rates. Fed's going to have to intervene and cut rates as much as 100 basis points before the end of the year. Now, after last night's Besant's comment that there's going to be de-escalation with China, market now thinks that the resolution to this dispute is more realistic than before. I mean, it's not guaranteed, but still they think there's maybe some ways of reaching an agreement and as a result, people are less concerned about potential recession, and as a result, people are less they're discounting the possibility of a Fed's having to step in and cut the rates. Market thinks it's lower now. So, but still, despite that, if you look at the CME futures, market thinks that there's at least going to be 3 rate cuts, possibly 4, and then market seems to think that there's going to be at least one of them will happen before July. So that's what the market thinks right now.
You have any thoughts on that, Rick?
Nothing really substantial to add, but I am surprised the rate cut odds. So there's 3 priced in now, which is basically we've fluctuated around there since March, and we got back to like the early March level. I'm surprised that didn't price a bit lower with Trump's comment. I thought some of that was tied to like Trump pressure, because I don't really think a rate cut will help. Like, say, I think they're in a bit of a predicament because I don't think monetary policy is a tool to address supply issues, which I think is the inflationary pressure now. And then so whatever they do with interest rates, they won't really prevent like bad policies, because bad policies will have the like structural effect. So I'm not. That's why it didn't really make sense that Trump was so. Although there were so many articles about Trump not wanting Powell around or wanting to pressure Powell, and the article by a Wall Street Journal that he was thinking of removing Powell for a few months now, because he needed that scapegoat, and it doesn't really work to play the game if you remove the guy who you can like scapegoat. So I thought that would price a bit differently, but it didn't really move last night, as the headlines came out, or as Trump said he wouldn't remove Powell. But yeah, I think Fed's in a difficult position. One thing I'm not seeing anyone, like, the old trope is the Fed always acts too late. And I'm surprised there aren't more people. I think people always realize this too late also. Like, people realize the Fed acts too late after they've acted too late. And I think today we don't really see anyone criticizing or raising that possibility that they're acting too late. So my thinking is the economy is already like weaker than we think. I think the fast data kind of point to that in April releases, or the Fed is, as usual, will probably react too late. So I think they're in a pretty difficult position, which is why Powell kind of seemed to take like a head-on stance in his last press conference or presser. But yeah, I don't think interest rate cuts is what really needs, what the economy really needs.
But how do we explain like the recent 2 days? I mean, like maybe a week of rally in Bitcoin, because I think it like 2 days ago it was trading around the 88K range, and then it just blasted through 93K. Right now it's 93.6K, and some people are saying, this is like the unwinding on de-dollarization trade. You know, the guy from Blockworks, he wrote this long article about how countries are de-risking from being heavy USD and rotating into other things, which is gold and Bitcoin and other stuff. So do you have any thoughts on why Bitcoin has been rallying while NASDAQ has not been rallying so much? Like, AKA, what's the reason for the quote unquote decoupling, in your opinion?
Yeah, so it's really interesting, I think, what happened since April 2nd, because if you look at the history of Bitcoin's correlation with equity market, it has gone through some phases, like actually largely 2 phases. I think since inception till about year 2020, the correlation between BTC and equity market was very, very low. So, correlation is expressed in terms of correlation coefficient. And, just to recap, I'm sure everybody, some people already know, but if it's -1, it's like a perfectly negatively correlated. If it's +1, it's like perfectly like positively correlated. A zero means a zero, like a zero correlation. Usually, coefficient lies somewhere in between these numbers, maybe between 0 and 1. Bitcoin against the S&P or NASDAQ, the coefficient used to be between like around 0, actually, like slightly negative or slightly positive, but it was like oscillating, like around 0 for between inception till maybe year 2020. But then something happened in 2020, and I think it was, on the back of the Fed's, quantitative easing in March on the back of COVID-19. And ever since that, the correlation has picked up. Not as much as other assets versus equity, but, it's gone up to maybe between 0.3 to 0.6. And it's been that way since the early 2020. And I think what happened there was that it was, I think, because of the QE in 2020, I think that attracted a lot of institutional interest into this name and into BTC. And then that kind of that participation, institutional participation, even without ETF, but that institutional participation, I think, attracted, basically you have the same type of investors trading Bitcoin as it is in traditional market. So as a result, the correlation picked up. It is a still relatively uncorrelated asset compared to, let's say, amongst the equities of different countries, or maybe some other like between other types of commodity and equities, but it's kind of higher compared to like first half of Bitcoin's history. Now, what happened since April 2nd is that it's showing some signs of decoupling, and it remains to be seen whether this kind of trend will continue, how long it'll continue, or whether it's going to intensify. I'm not sure, but I think one thing that clearly happened, maybe starting from like a week after the April 2nd, was that the Bitcoin started to rally when the gold was rallying. And it definitely started to outperform the likes of S&P or NASDAQ. And I think it's a reflection of investors, asset allocators wanting to diversify away from their US dollar positions. Now people are looking for, again, I think because genie's out of bottle, that people now know that US dollar is not going to be what it used to be. If the Trump is so fixated on fixing trade deficit, even at the expense of all these mayhems, that means that the US dollar, there's going to be, basically US dollar is, the large deficit, trade deficit is also a result of this current US dollar hegemony environment, because in order for the US to supply US dollars to the rest of the market, rest of the world, it can only be financed through trade deficit. But if they're going to reduce trade deficit, that means not as much of a US dollar is going to be available to the rest of the world. So people will naturally have to look for something else to replace US dollars, not replace, but rebalance. I think rebalance is the right word. It's not binary. They will still continue to use US dollars, but they would want to maybe diversify and rebalance a little bit away from US dollars into other types of asset. But what that asset is going to be, people still struggling to find. Gold definitely is going to be one of them. That's why I think the gold rallied. And then you have now this thing called the Bitcoin, which is essentially a digital version of gold. And I think that's why the Bitcoin have performed, outperformed the likes of S&P and NASDAQ.
Yeah, this is the moment that every Bitcoiner, probably every crypto guy, was waiting for a long time. I remember myself telling my friends that Bitcoin is going to go to $1 million in like 2017, but I don't know. It could reach $1 million at this pace, but again, we never know what's going to happen. But it also makes me think of, what about China? Like, well, I in theory, I know that, the CCP is not a very honest actor in terms of like monetary policy internally. So that's why people don't want to, park their money in Chinese capital or Chinese capital markets. So do you think the Chinese yuan might have some more gain some more dominance in the future?
I think China is definitely it's a like a renminbi or CNY assets are something that can gain at the expense of reduced importance of US dollars. I don't think they can completely replace US dollars. I don't think any assets, actually, any currencies can replace US dollars. It's going to be more of a gradual rebalancing and transition away from the previous dominant position of US dollars. And I think some of those gaps is going to be filled by the currencies of other superpowers, China being one of them. It could be, I don't know, Euro can maybe fill some of those gaps. Japanese yen can potentially do that as well. I've been arguing that the Korean government should make an effort to do so as well in my recent presentation in Korea, but that's probably a long shot. But so it's going to open up possibilities for other currencies, I think. And China, although they are second largest economy in the world at the moment, unless they liberalize their capital account, that's not going to be very easy.
Rick, do you have any thoughts on the China-US relation and the next currency, the next global currency, that type of stuff?
I think the de-dollarization or moving away from dollar thing is always a little bit of FUD. Maybe it settles around, I don't know, right now it's 60% of FX reserves globally. And at the start of 2000, it was 70 or something. But I don't see it meaningfully dropping anymore. But I think on the China thing, that relationship with dollars is a bit more binary, especially if you're a emerging market and you have Chinese debt. Or China came in and built some public infrastructure for you and whatever, and they probably installed some spyware while they're at it. But you see that in Africa, so EMEA, EM as well. But I think that decision is a bit more binary. It's either going to be Chinese dominance there, and their FX reserves are more CNY, and because they have Chinese debt to service or whatever, versus the dollars they used to hold. But I always think these things, because if you look at I can't remember what exactly it showed, but there was a chart of world currency dominance over the last few hundred years, and for the most part, it just follows what the biggest empire at the time is. And that's not something that changes very quickly. That's a multi-decade at least, or a multi-century process as empires rise and fall. Actually, the chart was even longer. But I think that if you think of it as a trend that long and something that will take our lifetimes to realize, then the dollar dominance will probably continue unless you see another country with another currency dominating the world in the way that the US does, because it would have to be at the expense of the US dollar. So I think FUD. So I'm long USDT.
Yeah. USDT to $4.
I think so.
I'm always long in USDT too. But yeah, because there's a lot of US FUD on the timeline right now. If you go on Twitter, everyone's talking about, oh, the US is done. China's creating these great things. Look at their mega infrastructure projects. They got robots, they got floating, whatever. But on the other hand, if you go look at channels that actually criticize China, you also see the dark side of China with a lot of youth unemployment. Their real estate market is pretty fragile, I think. And, there's rumors of Xi Jinping losing some power internally. I have no clue what's really going on in China. But like you said, I really agree that it's not going to change overnight. So I'm still bullish on the dollar. But, recently it seems like we did have a lot of sentiment shift towards like a more neutral currency. So we have to ask if we're going to rally back during the summer, because there's the saying, sell in May and go away. But will this like relief rally become like a new bull run? Like, what are you expecting?
Yeah, I mean it's a $1 billion question, and I mean I don't claim to have a clear crystal ball on that, but I think I think the extreme uncertainty since on the back of this the tariff dispute it has subsided somewhat for at least for this year. I think we've seen the worst of it in my view. And I think although the resolution with China is going to take longer than other countries, some news around some sort of agreement with other trading partners, maybe with Japan, South Korea, Europe, I think some of these will come first, and that can sort of ease some of the market concerns that we've seen so far this month. So then we have to think about what that means. I mean, like, even the slight comment from Besant last night was enough to trigger this rally, right? So you can imagine that if there's some more concrete announcement comes out on resolution of the dispute with other trading partners other than China, then I think that can also fuel some additional rally in risk assets. So maybe, and also another thing is this. I think I mentioned it on my daily this morning, but we have about a week left before the Trump's first 100 days is over. It's April 30th is going to be his first 100 days, and there's going to be a lot of media scrutiny on what he's done since he came into the office. I think Trump is somebody who knows how to I mean, I guess to like manipulate. I don't know, manipulate is the right word, but how to handle media. So I think he wants some sort of he's incentivized to come up with some sort of achievement before next week, and so maybe something will come up between now and April 30th. So I think all this, at least all these things, I think kind of it's a good setup for the short-term rebound of the market to continue. I mean, and whether that's going to be sustainable into the second half, I think it's another question. I think that depends on maybe a lot of other things as well that we cannot clearly see at the moment. Tariff being one of them, but I think another big leg of Trump's policy is tax cuts. And so far, the headlines haven't really focused on what's going to happen on that front. But I think there's ongoing debates in the Congress in terms of whether they're going to extend the tax break from 2017. And hopefully, maybe there'll be some resolution around that, before summer. So if that happens, that can be additional boost for the market. So I mean, I don't mean to like paint overly rosy picture, but I think suffice to say at this point, I think we can say that maybe the worst of this uncertainty may be behind us.
So I think Peter is slightly optimistic. Personally, I am still cautious, but a little bit optimistic. I was like super bearish until like 2 days ago, but then everything kind of changed, and people are making comments. It seems like Trump has no strategy. They have no clue what they're trying to do. I mean, that's what people want to say, but I don't think they're that stupid. So, I'm just cautious because still it seems like the US-China trade war, it's going to be some sort of it's going to drag on, in my opinion, even though he says we're going to cut like the tariffs into we're going to significantly cut the tariffs. But the China-US relation is a very complicated one. So I kind of deployed some more capital here because Bitcoin was looking good here. And I'm curious about what Rick has done.
Oh, as you know, I'm always I'm not joking when I say I'm always long. It's pretty unhealthy. But yeah, I agree with what Peter was saying. First of all, it's only another way to look at it is it's only been 93 days or whatever since he's come into office. That's pretty short. And I think like Trump inherited an economy that was like steady growth, but stock markets are a bit lofty. There was some vulnerabilities, like housing sector, cooling labor market, etc. But I think investors kind of ignored that when he came into office because they expected a push for growth by the administration. So you saw like risk do well because they anticipated like a mix of tax cuts and deregulation. But that narrative has all subsided, which is also to say that that narrative has not really changed. It's still there, and it can still come back as easily as it went away. And if that narrative starts returning while deals are being made on the tariffs with a lot of countries coming to the table and people conceding and whatever, because again, I think it's all the uncertainty versus the actual outcome that people are worried about. Like there were surveys with CEOs by the Wall Street Journal and JP Morgan and the New York Fed also. A lot of CEOs would feel safer with less uncertainty, even with the worst outcome in tariffs. So it was the uncertainty that was pointing to things, to the worries, which is always the case. So if the narratives that push stocks higher on Trump winning about tax cuts and deregulation come back and deals are being made, and the uncertainty, that tail risk is slowly like removed, I think it could be pretty good. So again, I'm talking through these lens of being like heavily long, but I think, I haven't changed my tone on that really, and I think it's still the case that people are very quick to judge these actions by Trump, but it's only been however long, 93 days, and we still have time. And like Peter said, he'll probably want to pat himself on the back and point to things for his first 100 days. Like that's a big deal. So yeah, I'm pretty optimistic.
Sounds good. But
So Juhyuk, I want to ask you, what have you been buying?
Oh, Bitcoin and hype, and also
Good. I thought you were gonna say gold like last time.
I'm not. I'm not that of a bad person. I buy Bitcoin when I want to buy something,
Nice.
Well, but also I've been trenching a bit. I've been buying some meme coins. They've been doing pretty well. I think the trenches are coming back.
Oh, really?
Even though the graduation rate and like all these sniper bots are kind of messing with people. But I think my personal thought is that as long as people are greedy, there will be a hyper gambling zone, which is meme coins and the trenches. So I've just like, sprinkling a little bit here and there, especially in fart coin and like these old memes. And I think they're doing pretty well. So actually the barbell strategy of fart coin, hype, and Bitcoin is really, it's like the best trade right now to actually hold for long term. People say that it's a crowded trade, especially hyper liquid, but I don't know. I'm not sure about that because like if you look into the markets right now, what else are you gonna buy? That's the question. What do you want to buy? It's either hype, Bitcoin, Farcoin, or some coins that have fundamentals. Like let's say a lot of people are talking about Pendle or maybe Athena. I don't know, but I think fundamentals really matter in these markets, and also hyper gambling is coming back. So I'm pretty happy. But I want to finish the. I want to finish this podcast with a very hypothetical question. So we've been going through the U.S.-China trade wars and all that, and I've been thinking, what would a post-dollar world would look like? Let's say the dollar hegemon has crumbled significantly, and we live in a world that does not resemble the current world order. Like, how would that world actually look like, or what would be, the biggest reasons that would actually happen? Have you thought about that, Peter?
Yeah, I mean, I think the person who really has a good kind of framework around all this issue is Ray Dalio, right? So I think his views on how he's done numerous writings on this topic, and I think recently also published a book. I forgot the exact title of it, but I think it's called something like "How Empire Falls" or something like that. So I think he has a very good framework on how these things happen, and usually it involves some large amount of national debt, and the country having to maybe inflate themselves out of it, and that's one of the components of the one of the drivers of the empire fall. I think, and so something like that is happening in the U.S. You can say. I mean, obviously not overnight. It'll be a very gradual and slow and gradual process. I mean, if you look at the British Empire of the 19th century, you can say they went through a similar process. I mean, it was at the peak. The British Empire had they dominated the world in terms of there was no what's the phrase, that there is no the sun never falls on British Empire, because they had all these colonies all over the world. But I think eventually, because after the First World War, the country basically went bankrupt. So they have no means to sustain all these colonies, and they had no choice but to let them go independent, and that was the start of the crumbling of a British Empire. And the process was gradual, and even after the World War II, the Britain, I think there's some lingering legacies, so they gradually phased their British pounds was still held by many sovereign states as a reserve currency, but gradually it was reduced and handed over to the U.S. So even that transition was a very slow process. So I think going back to your question, what is that world going to look like? I think it's going to be a slow transitioning, and it's going to look more like a multipolar world rather than what we have right now, which is unipolar. I mean, already we're already kind of seeing some elements of a multipolar world already, and I think it's a great setup for Bitcoin. I think assets like a Bitcoin, which is politically neutral. Also, it's an emerging new asset, so there's no clear country that kind of has taken the leadership in the supply of the Bitcoin. So it's everything is up for grabs. So this is the best, probably this is the sweet spot of the adoption curve in terms of a store of value. So now is the time to really, I think, if you haven't done so already, I mean, and then right now there's no excuse not to own Bitcoin, especially now you have a ETF. So even if you not comfortable dealing with, crypto exchanges or private keys and all the technical stuff, you can just go and buy IBIT and, you're all set. So really there's no excuse not to own Bitcoin in my view at this point.
Yeah. I think that's a very good way to see it. I think to understand, maybe try to predict what's going to happen in the future, we can look at how the British Empire fell. I've actually not read that book, but yeah, I think it's a very good time to read that. And I also remember Ray Dalio commenting on the recent tariffs too, and I think he was pretty concerned how this thing will make the U.S. lose more relevance in world politics. And it's actually a scary time to be, in this whole environment, because it's, for me, like people like me or Rick, we're millennials or Gen Z, and we grew up in a world where only the US mattered. Like, the 90s were like the prime times of my life. Like when I think about, the world in the past, it's just like the US, and US was the only thing. But now we're entering a world where everything that I grew up is going to change, and it's going to fade away. So yeah, I'm trying to catch up to these new trends, and I hope everyone watching this prepares themselves for a drastically new world. Well, it'll be a slow, gradual change, but time flies. So yeah, I hope everyone.
Sorry, go ahead. Yeah, continue.
Yeah, I hope everyone just gets prepared.
I think Rick's gonna take an offense at you lumping him into Millennium because he's younger than that.
That's why I mentioned Gen Z.
I'd rather be millennial.
Yeah. Do you have any comments on this one, Rick?
Not really, but I did think if Trump did go ahead and remove Powell, I think that would have been a cause for everything to go down and people to move away from the US like ASAP. So I thought that was actually serious. It was that serious, and that would have been a fast process, not the slow natural process Peter was talking about. Like if that actually happened, I think the whole credibility crisis would have been massive. It's not happening, so all good.
Yeah, he should have fired Powell so we could accelerate to a Bitcoin denominated world.
Yeah, and then we would be the standing winners.
Yeah, and Fartcoin. Anyways, it was a good chat. Thank you, Peter and Rick. I think I will see you guys next week or the week after. And thank you for tuning in today. Goodbye.